Hi there folks, welcome to this week's weekly forecast. It's Monday the 2nd of August. Right, for those of you that were following the currency markets last week, you would have not helped but noticed that the US dollar was in big trouble. The US dollar was in free fall. It actually dropped about 1.25% on the week, mainly down to the fact that the Fed chair, Powell, he came out with basically some really dovish comments regarding the tapering of their asset purchasing program that they're doing at the moment. Asset purchasing basically is a way of putting money into the system, the cheap money. Basically, the markets were expecting them to wind back on that. They call that tapering, and that basically put upward pressure on interest rates and therefore the dollar. However, that was not the case, and Fed Powell was actually quite dovish, although he was very upbeat on the job numbers, which of course is all about this week. Job numbers later on in the week, non-farm payroll and so forth. More about that in a moment. Okay, so let's have a quick look then and see exactly how the currencies paired up last week. Remember, this is my momentum meter. You can get this from the Forex Signals trading room. It doesn't cost you a dime. You can just download it once you are inside the trading room. It basically tells me the strength and weaknesses of the different currencies. And you can see here the greenback, that is basically aptly coloured green because of the greenback. It's the US dollar. You see the US dollar has been in steady decline. This is on a daily chart. You can change the settings on here to have it on a 5-minute if you want to go scalping or lower time frames and so forth. But this is on the daily. You see the dollar has been in steady decline all week. Also note here the Australian dollar. Australian dollar is the orange line down here. This has also been a really weak currency over the last few weeks. Basically being plagued by the COVID pandemic, lockdowns now spreading across Australia, basically impeding on their economy as well. So the Australian dollar has been under a lot of pressure this week. We do have the Reserve Bank of Australia out this week. That's when they decide on interest rates. It's unlikely that they will be progressing with their tapering, more likely to reverse that theory, and that's obviously why the Australian dollar is under pressure that week, and we expect that the Australian dollar will continue to be under pressure this week. Of course, only time will tell. Remember, this doesn't predict the future, it just tells me what's happening at the moment, and I like to buy the strong currencies and sell the weak currencies for my edge. Also note here the British pound, that's the white line. British pound's been quite strong, I guess because of lockdown is basically easing and the economies are now ticking back into business. COVID pandemic, COVID cases are on the fall as well, so the economy is getting more supported by that. And of course we've got the MPC this week, another central bank rate decision. Unlikely again that they will be cutting rates, but there are a couple of the MPC members that have been calling for a reduction in the stimulus. Remember, a reduction in the stimulus, call it tapering if you wish, a reduction in the stimulus basically has upward pressure on interest rates, and that basically means the currency, well, in theory, should follow where interest rates go. So that is basically putting some good momentum behind the British pound, and that's why you'll see it pushing up. Remember the last couple of weeks? The Canadian dollar, it's been yo-yoing. It's been yo-yoing up and down and following oil prices. Oil prices dropped 10% a couple of weeks ago, and the CAD, you couldn't give the CAD away. Now the oil prices have recovered. Canadian dollar is recovering as well. It's becoming one of the stronger currencies as oil prices are stabling there as well. And of course the euro there, bang in the middle, the light blue line, that has been, well, it's basically benefited really from the weaker dollar. We did come into big support in the dollar on the DXY. I'll show you that when we get onto the charts in a moment. But the euro normally would benefit from a weaker dollar. Hasn't done too much. It basically is pushed down a little bit, but we'd expect the euro to have been a bit stronger than it was. The fact that it hasn't been shows me, I think, that there is predominantly a weak feel for the euro out there, and maybe that euro could come under pressure this week. Certainly if the US dollar does indeed find support and continues to push higher. All right, let's have a quick look at what we're looking at this week. Okay, so we're looking at the pound against the Oz. I just showed you there on the momentum meter why we like the pound against the Oz. Pound is a strong currency, Aussie is the weak currency. We've broken through some key levels of resistance. Ordinarily, old resistance acts as support, so we do see now this as a bit of a base. We had a couple of daily bearish candles last week, which didn't actually lead to any real momentum to the downside. So at the moment, the bias momentum continues to be with the pound against the Aussie dollar, and we've got basically a target level a ways away there at 192. Again, this is not a trade signal. You need to apply your own trading strategies to your trading. These are just my biases, and they can change throughout the trading week. But these are just the biases that we have at the moment. But these are not signals that you go now buy the pound Oz, inspector, bank your profits by the end of the week. Not the way it works. Okay, also looking at the euro against the Oz, as I mentioned, euro against the US dollar. As I mentioned, big support came in to the DXY, which is the index. We're seeing that now, and basically the softer euro. Of course, this works in opposite from the DXY. So the euro has been pushing up, the dollar's been coming down, but we're coming into this, you can see this blue band of resistance. We expect that to hold that. That also coincides with the support zone in the DXY. So as I said, we do have really big data out later on in the week in terms of non-farm payroll. It's basically the job numbers in the US. I'm expecting that the job numbers are going to come in around the 900,000 level. That's the general consensus from the analysts. So there's going to be, I think, upward momentum in the dollar this week into that read at the end of the week. I'm going to explain a bit more about that when we get onto the screens in a moment. But I expect the dollar to come under a little bit of buying momentum this week in the run up to that. Okay, also Aussie New Zealand. As I say, I don't really like the Aussie at the moment, unfortunately, because of the COVID pandemic out there. Aussie's basically being shut down across the country. That's affecting the Australian currency. The New Zealand dollar, I'm looking to buy the New Zealand dollar this week against the Australian dollar. I think that can be like for a nice trade. There's been a good level of support broken, retested as well. This week we do have some data out of New Zealand in terms of the job numbers. We're expecting some quite positive reads in that. Now, if the New Zealand comes out with some good job numbers, well, there's a case building that the next time that the RBNZ meet, which is in a couple of weeks' time, they are going to move interest rates up. They will be the first of the pack of 8, basically, to start moving their currencies up. At the moment, the markets are pricing in a 50-50 chance of a rate hike in New Zealand. If this week's job numbers come in stronger, then I would expect that to shift significantly and the Kiwi to find some support. So selling Australian dollar, buying the New Zealand dollar could be the right way to play. There's also structural levels as well working for that. Okay, Max, short euro against the pound at the moment. Pound, as you know, is strong, and the euro is, well, it's weak really, considering that it should be a lot stronger with the weak dollar. So we're expecting that now to come down. We're in a solid downtrend in the euro pound. Maybe that will continue this week as well. We have come into some support, broken through the support. Now the path of least resistance is to the downside. Right, now let's jump onto the screens and have a look in more detail and look at the economic calendar. Come on. Okay, so the first chart I want to look at here is the DXY. Now the DXY is the dollar index. It's basically the dollar pitched against 6 of the main other 8 currencies out there. And the biggest component of the DXY against the US dollar is in fact the euro, and that's often why you'll see the euro dollar chart being almost opposite of what you see in the DXY. But what you've seen here in the DXY is basically a falling dollar. As I mentioned there on the screens a moment ago, dollar has been in a decline. Now this is a 4-hour chart. We were looking at this inside the trading room, and eyes were focused on this level here. This level, not seen basically since June, was always going to act as a support zone, and that's exactly what basically happened. We got down to this support zone, and then the buyers came in to start supporting the dollar. Now this week we are seeing a bit of a move already. It's only Monday, but we are seeing a bit of dollar weakness coming in, but my eyes again will be on this level of support if we do indeed test it. Now, doesn't matter what currency pair you're trading, you need to be aware of this level. If you are thinking of selling the dollar against other currencies, beware that the dollar is coming into some support on the DXY. It doesn't necessarily mean it will hold, but it does mean if you are thinking of trend continuation, dollar weakness, that maybe that could be possibly running out of steam. So it's always worth looking at the DXY for clues on where the dollar may go. Okay, now I want to look at the Australian dollar against the New Zealand dollar that I mentioned to you on the screens there. Okay, so this is the Australian dollar and the New Zealand dollar. This is a 4-hour chart. You can't help but notice that this is in a solid downtrend. It's been making a series of lower highs and lower lows as we go down. So last week we broke through this key level of support. Now often when you see key levels of support broken, they turn back as resistance. So the markets break through the support, back up to retest. That is acting as resistance. And that is exactly where we are at the moment. So as you see, a bit of profit taking coming on, the market pushes back into resistance. We're expecting, or I'm expecting, this now to stall around these levels for the reasons I mentioned: Australian dollar weakness, New Zealand dollar, possibly good job numbers coming in as well. And technically, this is quite a strong level. So the path of least resistance for the Australian dollar against the New Zealand dollar is now lower. And finally, let's have a quick look here at the pound against the Australian dollar. Again, of course, pound is one of the stronger currencies. This is a daily chart. You can see we have been above the moving averages now pretty much since May time. So this has basically been a only buy trades since May. This is the daily chart, and you'll see here the last couple of days, Wednesday, Thursday of last week, we put in these bearish rejection candles. This had our eyes open. We were expecting a potential reversal had we broken through the bottom of these two bearish pin bars. However, it didn't. Friday was another strong momentum, basically closing higher than where those two candles had a peak on the Wednesday and Thursday. This is now strong bullish momentum to the upside, and in fact you need to go out to the weekly chart now to find the next level of potential resistance that now we maybe will be looking to challenge. And I would say all the way up to basically, well, 93.5 really has got certainly got a potential to get up there, certainly with the strong bias momentum. Of course, this is a daily chart. You need to have wide stops in order for this, but at the moment the bullish momentum still is certainly to the upside. Now let's have a quick look at the economic calendar, because I say we've got lots coming out this week. Okay, so if you head over to the forexsignals.com site, scroll down to the end, you'll see Forex Economic Calendar. Pulls up this page here, absolutely free. Do go and check it out. And down here on the left, on the right, you will see a gauge of how important the releases are. Anything deemed high impact news will be coloured red. Yellow is medium, green is lower as well. They've got the PMI data here as green, which is low impact. I don't know about that. I think this is more high impact news. Purchasing Managers Index is basically like a survey for the business leaders, telling them are they going to be employing more staff? Are they getting upbeat about the economy? The central bankers love a PMI report. Anything above 50 is deemed to be expanding. Anything below 50 is deemed to be contracting. So central bankers do like to look at that. They've got it down as a low impact news. We'll have to wait and see. Okay, so we've got later on in the week, we've got European retail sales. That's very important. Retail sales are an early indication of inflation. Are people spending more money? The sales are going up. That basically is upward pressure on inflation. That basically means central bankers may have to react. They're going for up 1.9% month on month. Quite a big read there expected on the heels of last month, 4.6. So we're paying attention to that one. Of course, you've got some PMI data here out of the US as well. As I say, keep an eye out for the PMI data. Later on in the week, we've got the MPC. This is the Bank of England now, deciding on interest rates and are they going to be moving them and so forth. Here you'll see 9 members of the committee. Basically, they're expecting 9 to say no change in interest rates. But what's more important is not the actual interest rate move, because it's unlikely they will move, but it's basically the monetary policy report and summary and so forth, and that basically gives us clues on what the central bank is thinking. As I mentioned, there is a couple of MPC members out there at the moment that are basically calling for reduction in the stimulus. Then of course Bailey's coming on afterwards and will be speaking as well. So all this high impact news for sterling later on in the week. Then we just basically see the Reserve Bank of Australia. That is there on the 6th. That's their policy statement as well. Are they going to be moving interest rates? No, not. But are they going to be easing back on their asset purchasing? Are they going to be basically tapering? Chances are not, because of obviously the way the economy is going there with COVID and lockdowns and so forth. And this all basically drags us into Friday, a key event. It's non-farm payroll. We do stream it live as well. If you want to come into the room, you can check it out as well. It's a live event. Basically, it is the biggest trading event of the calendar month. It basically tells us how many people have jobs, how the US economy is doing. And of course, you've heard the expression before, when the US catches, when sneezes, the whole world catches a cold. Basically means that all the economies are pitched in to see what's happening in the largest economy in the US. This month they're going for a read of 900,000 jobs added to the economy. I think if this comes in at over 1 million, then you're going to see a big reversal in the US dollar, and you're going to see the US dollar catch a bit of a bid. So I think the consensus is that the read will be high. Just how high it will be, we'll be definitely watching in that. And I expect the dollar maybe to grind higher into Friday with the same view out there. Of course, if there is a big miss to the downside, that's just going to cement the view that they ain't going to be tapering anytime soon in the US, as the economy still lags behind after the COVID pandemic. That's basically what we got to look forward to this week. Quite a lot out. Okay, so I hope you found that useful. Now you know what's in store for the week ahead. If you like the video, do give me a thumbs up, give me a thumbs down if it's not your thing. Don't forget to leave me a comment as well. Follow us on all the socials and all that. Now, as you know, we are streaming live around the clock. We're streaming 6 times a day, 5 days a week, looking at market opportunities, looking at key events as they unfold. If you want to take part in that, you can do so. Just head over to the forexsignals.com website. Now, I did say last week that I was giving away 10 discount codes for the first 10. That got taken up pretty quickly. So I am going to release 5 more discount codes. There's 30% off any of the packages. If you want to avail the code, it's in the description tab below. You've also got a 7-day trial. So if you don't like it once you're in there, then of course you don't have to stay and you don't have to pay for the membership. But there's a 30% discount indeed if you want to take it. If that's not your thing, that is not a problem. Now it's holiday season. I will be off now for the next couple of weeks. Well, I'll be working this week, but I won't be doing the weekly forecast next week or the week after. We'll be back on the 23rd of August to resume our content here. So I'll see you in about 2.5 weeks' time. Have a good one.